All right, everybody, back again. In this video, we're going to talk more about indicators. I know that they kind of get a bad reputation, right? Reputation that says they're always late to the game, that they're misleading, that they are training wheels, and so much more. So when it comes to indicators, a lot of people think that I'm kind of an anti-indicator trader. That's not true at all. In fact, it couldn't be farther from the truth. My problem with indicators is that people don't know how to use them. They don't bother to learn how to use them, and they think if you just stack enough of them on there, it might work out eventually, right? That there's some secret magic formula. It's not true. So in the two videos so far, we've talked about multicollinearity, and then we've talked about a couple of different ideas behind indicators. I'm going to introduce an idea here today that helps you build a bias for your trade. Now, in the current market environment, what we would normally use for determining bias on the day doesn't work too well. And the reason why is because it was designed for a low volatility environment. And one of the key aspects that made it a great tool is that we would use it to find a day when there was an anticipation of a higher volatility event. Every day right now is a high volatility event, and so that doesn't work. And what I'm referring to is the trend day checklist. See, what we used to do a year ago, and when I mean a year ago, today is 9/24/2020. And a year ago, we could wake up in the morning, come into the trading office, and put together a trend day checklist, which would help us identify before the bell when we would get a day that looked like this, where the market would just open and rip all the way to lunch and then some. And we haven't had one of those days where we could identify that kind of activity in advance for quite a while. The trend day checklist would focus on building a bias from the higher time frame down. It would focus on looking at overseas markets and doing price action analysis off the higher time frames. All of it with the idea that when we could find a high volatility event and a consistent message, that we could predict and anticipate a trend day. A trend day so that when the bell rang, we were already there jumping into the trade. We didn't wait for pullbacks. We didn't wait for gap closes. We were able to just aggressively punch right into the market. We can't do that in this market. Instead, we have to use the opportunities that are available right now, and that is focusing on a consistent message and price action, looking for gap fill, asking questions out of the market instead of thinking that we've got that bias already built. And then once the day has begun, we can start looking for trade opportunities to join into the price action. One of the things that we always try to do is identify what the market is doing so that we can join into the market. We're not trying to trade by ourselves. We're trying to just join into the flow of the market. If it's going down, we want to join in. If it's going up, we want to join in. And if we think it's going to flip, we want to join in, right? Trade reversals, pivot points, hop in on a trend and take a trend trade. So you need to have a consistent bias for that. On a market that we have right now, you could get a strong, clean trend for 2 hours, and then it'll flip around and do something completely different, and then it'll flip around and do something different again. Kind of like a day like this, right? We were bullish. No, wait, we're bearish. No, wait, we're bullish. So one of the things that you can do on a market like this is you can use the higher time frame and build a bias. Another thing that you can do, especially on days like this, is identify that this trend is going to continue. Now, one of the things that we do to identify a trend and when it's going to continue is look at the clock. Okay? So trends typically end around lunch. On the other side of lunch, we look for a trend to resume or for that rounded reversal. And that is great, but what about when you're thinking it's going to be a day like this? We run to the downside, you're trying to call the low of the day and trade it back up, only that's not the low, and then you get a new low. And then you try for another opportunity like this, and oh, that's not the low either, and then you get another low. So when you can identify that the trend is alive and that the trend is going to continue, you don't try to trade these reversals, right? And we've had, in the last few weeks, a lot of those days where we're getting those reversals, okay? So it'll be one of those, one of those days with a good, strong, clean message. The market completely flips around and runs right back down again. The trends just aren't continuing, right? Another one there. So what happens on those days when it really does continue? What can you do to add to things to help you confirm that, yes, it's just a pullback, join in and take the trade and go with the market, not against the market? You can go into the higher time frame and use a tool from these higher time frames to help you establish and or confirm that a trend is in place. From this higher time frame, once you have your bias established, you can go back into the smaller time frames and only trade in the direction of your confirmation. So if you get a bullish signal on the 2-hour, for an example, you could go back into the 5-minute and only trade bullish trades. Or you could go, if you had a negative signal here, then you could go back into the intraday and only trade short positions, right? So that's what we're talking about. One tool that you can use to do that is the ADX. Now, the ADX was designed to identify the strength of a trend. This ADX indicator is set to 2 hours. So if I leave and I go back down to the 5-minute, I'm still looking at the 2-hour ADX. That's really helpful. That way I don't have to keep going back and looking. It doesn't hurt, but still. So this would help you confirm that the strength of the trend is there. But what else can we do, right? What about direction? ADX doesn't give us direction. Now you can add things like DMI plus or DMI minus. Those are tools that are built into a lot of ADX indicators on different products. So you could do that, or you could just focus on a different indicator. On Thinkorswim, there is the TTM series. Now these are black box indicators. Thinkorswim doesn't share the source code, so we really don't know what all of these indicators are focused on. But we got a pretty good idea of their general structure. So in the TTM Scalper, I'm pretty sure it's using some sort of a moving average pair or moving average combination. I made my own. Mainly, I made my own because even though the word alert is in this indicator, Thinkorswim doesn't offer an actual alert. I didn't like that. I wanted it to actually have an alert, so I made my own. We'll just get rid of the one that comes with Thinkorswim and we'll look at mine. So mine actually paints the bars, and you can turn off the signals just from right here. You don't have to go in and click any of this stuff. And then it also has alerts. HP trend reversal, high pivot trend reversal, LP trend reversal is low pivot trend reversal. When we get a low signal, that's bullish, and when we get a high signal, that's bearish. Very simple and very easy. You want to put that on in the higher time frame. It is not an entry signal. We're not using this to get into or out of the market. It has absolutely nothing to do with you getting in or out of the market. It is only there to help you with the identification of your bias. Should I be bullish? Should I be bearish? Is the trend still intact? Will this trend continue? Are we near a reversal? Now, a lot of that work comes from being able to read price action. So anything that you do in the market that you can add to price action is good, but you always, always, always need the price action. I know it looks really good to see these arrows. You look at those arrows in hindsight and you think, wow, those are really great signals. I want to use that to trade. Well, you can't. They don't show up when the candle is forming. They don't even show up often in the next candle. They show up in the candle after that. So they're really, really laggy from the perspective of trying to use it to get into a trade. Trust me when I tell you there's no indicator that you want to use that says get in now and then you follow it into the trade. No, let's not do that. But from the higher time frame, like here on the 2-hour, I can see this low of the price action that we are building a base, and we're looking like we could rally out here. All right, we could have a breakout opportunity to the upside. There's a tradable event here, and I can use that arrow to help me confirm that there is market activity. Notice that this one keeps disappearing and then reappearing and then disappearing and reappearing. That's a bullish signal that is not yet formed. It's actually right now with the current price action being formed. That's how late that indicator is. Okay? Having said that, yes, they're late. Yes, they can't be used for trade signals. Let's go back and look at a couple of these and ask, hey, can I use this in my trading? So we had a signal down here on the lows that looks a lot like what we're dealing with now. In the Globex, near the Asian Open, price was breaking through the top of this structure, and that arrow was confirming that, yeah, this is a bullish opportunity. With this arrow, you would want to go in and only trade long trades if we maintain above that box. It's not telling you to go pull the trigger to get in, to get out, nothing like that. It's just telling you go long in this market if we can hold above that box. Now I gotta ask, do you really need that arrow to tell you to go long if we hold on top of the box? No. No, absolutely not. You don't need that. But if you're a newer trader and you're looking for some kind of confirmation, if you're looking to get some affirmation, use something like this so that you don't second guess yourself or doubt yourself. Because if you have a really nice setup and you're just doubting yourself and you don't take the trade, you could sit out and watch price just run away. And then later on, you're going to say, gosh, I should have did it. I should have got in the market. I should have trusted my instincts. So obviously, reading price action is going to be very helpful. But when you're new and you're working on building your confidence, when you can find something that helps you make that decision, do it, right? So look at these signals and think about how long it took for the market to fire. Did this signal show up in this candle, or did it show up in this candle? When did it finally appear? You know, would it have been a good signal? Well, if it was breaking through the bottom of that range and you traded the breakout, now remember we're on a 2-hour, so somewhere inside of this, hopefully there would be a Busby or some kind of price action in there that we could trade. But there's a breakdown in the market with a short signal. We would be trying to trade short through the morning all the way into lunch, right? So when it comes to using indicators, focus on stacking them in a way that looks at multiple parts and pieces in the market. Multicollinearity. We don't want a lot of things building bias. Now, the ADX can confirm the strength of a trend, and this arrow can help you confirm the direction or the bias that you should hold, so that if you get a long arrow, you can go try to find long entries, or if you get a short arrow, you can try to find short entries. Just remember that reversals start from the lowest time frame and come out, and that trend identification starts at the highest time frame and goes in. It's our job to find the sweet spot in the middle, so that even after you do go into the 5-minute and begin looking for a trade opportunity, you're in the lower time frame. You want to be looking for reversal signals like we had today with that head and shoulders. If you can't see the head and shoulders, let me help you point it out. And there is the neckline break. This head and shoulders is a little weird from the perspective that the slope for the neckline break is actually the other direction. So let's draw it this way. So there's the left shoulder, head, right shoulder break of the neckline. There's the trade opportunity. Okay, so that would be a reversal from a long arrow from earlier in the trading session, right? This long arrow here, perhaps, that said go bullish. You go bullish, and then you have that intraday reversal. You want to trade that intraday reversal. You want to ignore this because it came from the higher time frame, and reversals come from the lower time frames, right? Now, a couple of my clients traded that head and shoulders when I called it out today, and a couple of them got over 70 points. So amazing job not leaning on an indicator that says, oh, well, I should be bullish and I'm just going to ignore short opportunities. No. These are here to help you try to confirm your bias, but you don't want to ignore the signals when they show up. Okay? So no indicator will work effectively if you can't add other things to it, like background that comes from reading price action. I wish I could point you at more material that talks about the TTM trade alert, but since it's a black box indicator from Thinkorswim, we just don't know very much about it. The good thing is you can go back and do your own due diligence. You can do your homework on it. You can apply it to multiple time frames, including these higher time frames, and then you can try to identify how successful it is off of these higher time frames. Suppose you get a bullish signal on the daily or the weekly, and then you use that bias to trade Friday expiration trades in options, or looking to take long trades during the week or during the day, right? There's a lot of different ways to use these higher time frame signals on the smaller intraday time frames. And all of that would require you to still know what your entry looks like and what your exit looks like, where you're coming from, and how big you're going to be in the trade, and what your entry is going to be, and where your money management is. It's not just about win rate. It doesn't matter if you're winning only 10% of the time. I promise you, if you have good money management, you can really grow an account and make a lot of money, even with only a 10% win rate. It all comes down to the money management. So guys, I appreciate your time. I look forward to seeing you at the next video.